Folks, we've got lots to discuss. AMC had a massive liquidity squeeze in the after hours Friday after a court ruling, but today, the stock had given back much of its run. I need to discuss with you what is going on and what we can expect next for the stock, including price forecasts moving forward into the end of this week, and a big risk factor in terms of impending dilution that you'll want to know about. And before we get into it, a quick plug: if you would like to receive our stock alerts and reports completely free, make sure to sign up to receive ZipTrader emails with that first link down below. We have a lot of exciting research coming out this week and you're not going to want to miss it. Okay, first let's go ahead and talk market and what is running. Right now, as markets barrel towards all-time highs, you are seeing short squeeze after short squeeze. In fact, I was checking my watch earlier today and I realized it was squeeze o'clock. BBIG was up 52% today, up some 5x in the last couple of weeks. This is a stock whose short interest has just completely skyrocketed. The company actually received a NASDAQ delinquency notice, yet this is rallying like nobody's business. This is carrying on the trend where we see speculators and traders buy up stocks that have bad news, whether that's a bankruptcy filing or progress, whether that's a delisting notice, whether that's some other form of delinquency notice. Traders like to buy that as a big middle finger to short sellers and know that other traders like to buy it as well, so they try to front run them and try to get some appreciation. You had TUP up another 60% plus at highs today, another one where short sellers continue to build their positions out massively and also are receiving the big middle finger, and also maybe the pinky toe. Nothing is more offensive than that pinky toe. And these are just a couple of today's massive short squeezers. And this is in addition to the massive Carvana short squeeze that we've been seeing over the last few months. The way that I would describe this market is you're in a mini 2021 style market where people are willing to take the risk again, participation is growing, and people are looking at these short squeeze setups and they're not saying, oh, I should avoid them because they're going to go down eventually. They're saying, oh, I should buy in because I could make money. The market sentiment last year was, how do I protect my account? How do I avoid losing money? Let's play defense. The market sentiment this year, especially amongst the most active traders, is how do I make money? I understand there's risks, but I want to learn how to make money. And this is a much more fun market condition if I do have to say so myself. It's really quite beautiful. Some would even say bonita. But let's go ahead and move over to the main entree today. AMC. So right now, AMC stock is seeing its highest volume in a year plus. So far, it's showing some 231 million shares being traded today. This compares to an average volume of about 18 million with an entire supposed float of only 516 million. Well, that's a very, very big amount of shares to be traded. If 231 million shares out of 516 million in total are traded in one day, that means about half the company's float. Half the entire float was traded just today alone. Now you got to understand that there are two different main ways that you can analyze this volume and what is causing it. Number one, you could say maybe it's 20 million shares of the float trading about 10 times, and that's how you come up with the 231 million plus in volume. Or you might assume that there's a lot more shares out there than meet the eye. Perhaps there's a lot of phantom fake shares out there, and as they're in a state of panic, you're starting to see that show up in the volume, whereas before it wasn't showing up in the volume. Those are two different ways you can analyze this volume and explain it. You can be the judge as to which you think is true. But regardless, I think needless to say, AMC stock and what is happening with AMC stock right now is quite peculiar. So let's back up a little bit and give some context as to what happened today. So AMC stock goes up in Friday in the after hours after a judge blocked the chain's stock conversion plan that would have resulted in substantial dilution. They actually blocked a settlement which effectively blocked the dilution conversion plan. But nonetheless, this put a temporary block, a halt on this dilutive event. And then CEO Adam Aaron tweeted out, or I should say X'd out since Elon just changed the name, tweeted out a filing saying they revised the petition to the stock conversion plan and will be doing another attempt to get this through the court. I predicted in last night's video that this would result in a big dumpito in pre-market trading, and that is exactly what has happened. In the uploaded letter, he explained that AMC needs to be able to raise fresh capital. Quote, raising fresh equity in the near term is critical to our company, so it is important that we work to address the concern raised in the Delaware Court of Chancery's ruling on Friday. If we are unable to raise equity capital, the risk materially increases of AMC conceivably running out of cash in 2024 or 2025, or of AMC being unable to satisfactorily refinance and stretch out the maturity of some of our debt. So here he's making the case that if they don't raise capital, AMC is going to run out of cash very, very soon. And here's where he brings up an interesting parallel between some similar stocks, both outside of the movie theater industry and within it. The risk of financial collapse is not whimsical. Cineworld/Regal, the second largest movie theater chain in the world, fell into bankruptcy and their equity holders were essentially wiped out. Bed Bath & Beyond, which was viewed as the third most watched meme stock, also fell into bankruptcy and their equity holders also were essentially wiped out. So here he is saying, hey, wait a second. If we can't raise capital, we are going to end up like the folks over at Bed Bath & Bombed. But how true is this though? Well, you pull up AMC's Q1 filing, they brought in $954.4 million in revenue. They spent $1.062 billion in operating costs and expenses. You add in the cost of interest on debt and other expenses, and you're looking at a net loss of about $235.5 million in Q1 of 2023. Now, it is worth mentioning that they have gotten their net losses down quite a bit from Q1 2022 versus Q1 2023. It was at 337, now it's at 235. That's a pretty good improvement. But still, when you're looking at a company that's losing a couple $100 million per quarter, well, that's not a pretty picture. That money has to come from somewhere, and if it's not coming from the customers, then it has to come from the shareholders, at least until the company can become profitable again. So how much cash do they have left? Well, their latest reported cash and cash equivalents put their cash number at $495 million and at a burn rate of $200 million. Well, that doesn't really buy you too much time, and this was from back in Q end March. So it's likely that a lot of that has evaporated since then. So the fact of the matter is that Adam Aron, truthfully, is correct here. AMC does need to figure out a way to push through dilution so that they can live off their shareholders until they can become profitable again. We'll find out more on AMC's financial situation on earnings, which is coming out just around the corner, August 4th. But so far, it is pretty clear that what Adam Aron is saying does check out at least this part. Sounds like his prediction that they will run out of cash in 2024 or 2025 without dilution is pretty accurate. So then the question becomes, okay, well, what is best for shareholders? And that answer is going to be different based on what a shareholder wants with AMC stock. If a shareholder wants to play a trade, a really, really hot trade with a massive squeeze, then they're going to want something different to happen versus somebody that wants to be a long-term shareholder in the company. Both players may separately want their own squeeze, and both players may end up separately getting them, but the time horizon is very, very, very different. It's pretty clear to me and anybody that's really paying attention here that if you want to squeeze anytime soon, anytime, say, this year, well, you're not going to want any dilution anytime soon. If you're trying to get present-day shorts to rush to find shares to buy and cause massive price appreciation, it simply doesn't help if the company starts printing out new shares like they are toilet paper. But at the same time, the flip side is that from AMC's long-term perspective, if they don't raise capital, again, they're going to end up going out of business. And if they go out of business, well, the shorts that are in this or short this for the long haul, well, they're going to end up winning on the long game. So the way that I see it is it's in AMC traders and squeeze hopefuls' best short-term interest if the conversion plan gets blocked for a while and dilution is off the table. But at the same time, it's in AMC, the company's best interest, to raise capital to survive until they can get back to break even or a slight profit. But again, that could take years at the current pace. And in the meantime, because of this dilution, you may see some pretty substantial drops in AMC, way worse than we've already seen. If dilution is blocked for a couple months, AMC is very, very, very fair game for some massive squeezes. If dilution is pushed through right now, AMC is not going to be very prone to any sort of squeezing anytime soon, but perhaps over the next 2, 3, 4, 5 years, AMC can turn things around and flip the middle finger back to the short sellers that think that AMC will never make it. So that's my opinion based on the two different camps that you could be in. In the meantime, though, from a trading perspective, if you want to see this momentum continue, you'll want to see the judge continue to block and delay this proposal. You got to remember that this is a settlement and this will likely eventually go through, and you will eventually see AMC figuring out a way to massively dilute, and that's going to have a bad impact on the stock price. Right now, it is just temporarily blocked. So the game isn't playing the short-term window. From Investopedia, while a large majority of investors voted in favor of the stock conversion proposal in March, several thousand filed a lawsuit to block it, fearing further dilution of AMC shares. An agreement was worked out between the companies, but Delaware Chancery Court Vice Chancellor Morgan Zern rejected it. So again, this is likely a very temporary rejection, a temporary blocking of the AMC Dilutive Act. So again, very short-term opportunity, very risk-on opportunity, but very unique as well, something that's the best chance for AMC stock that we've seen in a year plus. The stock gave back a lot today, but it did find support at around 485 and then bounced off it pretty aggressively, and if this stock is going to see a new high, it's got to happen, in my opinion, in the next couple of days, or the next judge uncertainty is going to cast a big shadow of doubt on the stock, which could derail it before it even even begins. So what is your prediction, Charlie Toe? Well, my prediction is that if we don't hear another peep from Adam Aron or the exec board at AMC or the judge about this case, well, my prediction is that you could definitely see a lot more bouncing before this ends. If the momentum continues to hold and build ground the next couple of days, you're going to see a lot of the previously far out of the money options look to be more and more likely to expire in the money come Friday and the following Fridays, and that could help accelerate some of the momentum as market makers start buying in heavily in order to hedge against those options, right? And on top of that, as this process plays out, you could see some of those short sellers start de-risking a bit as the calculus has indeed changed somewhat. And this could indeed bode very well for AMC stock in the short term. On top of that, you got to remember that while the situation for AMC from a financial standpoint is pretty dire if they don't eventually raise capital, well, at the same time, AMC and the movie industry as a whole are having a pretty good couple of days thanks to the Barbenheimer release, which means a lot of AMC's problems might be pushed to the side for a few weeks as a lot of these positive headlines start circulating and as the stock price sees more and more momentum. Again, there's a lot of moving variables here with AMC stock, but I think it's undeniable that this is a very, very peculiar opportunity right now and worth watching at the very least. Anyways, let us know what you think is going to happen with AMC stock in the comment section down below. We love hearing from you guys. Have a good one, and we'll see you in the next video.